and we are about to start our next panel session titled Malaysia's Web3 Trailblazers, Pioneering the Future Digital Frontier. So we kick off with these grand pioneers exploring the future of DeFi and Web3. Let's give a big round of applause to our trailblazing panelists, co-founder of Jupiter, Seong Ong, co-founder and COO of CoinGecko, Bobby Ong, CEO of Etherscan, Matthew Tan, and head of token crowdfunding at Pitch.in, Nicholas Chong. And joining in as our moderator is manager of digital innovation at the SC, Dina G. Over to you, Dina.
Hi. How's everyone doing? Very, very quiet. Exactly, yeah. Welcome back from lunch, everyone. And I hope that you're all wide awake. And if you're not, don't worry, because we have a very thrilling, exciting topic here to keep you all wide awake. But today's panel is on pioneering future digital frontier of Web3. And it's a privilege to be joined by industry titans from the Web3 space here in Malaysia who are at the forefront of innovation. So Web3 actually represents a fundamental shift in how we think about digital ownership, about decentralized finance, and the broader digital economy. Essentially, this new internet economy is redefining how businesses and consumers engage with technology and capital. But here in Malaysia, as we see this rising momentum, we still need to address a few questions that remain. Firstly, how is Web3 development aligned with regulatory frameworks? What challenges need to be addressed from the Web3 angle for broader adoption? And how do we position Malaysia as a key player in the global Web3 space? But before we dive into this exciting discussion, I'd like to give an opportunity to our panelists to introduce themselves. So maybe we'll start with Seong.
Oh yeah, I'm Seong, co-founder of Jupiter. We are technically an aggregator on Solana. So there are so many places that you can buy tokens on Solana, but we're aggregating all the liquidity so that people can come to one place, buy anything at the best price.
Cool. Bobby?
I'm Bobby. I'm the co-founder and COO at CoinGecko. Been running this for 10 years, tracking the crypto space. Basically, what we do is we help users make sense and track the crypto space. We help you track price, market cap, trading volume of the tokens. We also run a second product, Gecko Terminal, where we track all tokens listed on decentralized exchanges, and there's over 3.5 million tokens from over 1,200 different decentralized exchanges and over 170 different blockchain networks. So yeah, that's what we do.
Hi, I'm Matthew Tan, and I'm the CEO and founder of Etherscan. So 1 year less than Bobby. I've been running this for 9 years. The best way to describe what we do is think Google search, but for the blockchain, plus the element of being a sort of source of truth. So we basically index and make searchable blockchain data, not only for Ethereum, but for many other different chains, even like the chain that Seong is working on, Solana. Thank you.
Nick?
Hi everyone, I'm Nicholas from Pitch.in. I think amongst the panel, Pitch.in is probably the most traditional business on the stage. So basically what Pitch.in does is we help companies to raise funds from the public. And we support different types of instruments. We do shares, and because we do the digital tokens as well, that's why we are on this panel. I think to put it simply, we help companies to raise funds from smart investors. So I think Pitch.in's angle in this topic is less of being a trailblazer ourselves. I think the giants, the Web3 giants are the three panelists beside me, but I think Pitch.in's role is more on helping Malaysia to find the next Web3 trailblazer, being a partner for them and helping them to actually raise funds, whether they're through equity or tokens. So I think that's the best way to put us in perspective.
For what it's worth, I think Pitch.in is a proper giant. Nicholas himself is a giant, an ex-SC employee and a good friend. But anyway, for our panelists here today, actually we have a broad range of diverse audience, both from the traditional space and some from the Web3 space. But Seong, perhaps I could start with you. How would you best describe Web3 in simple terms, and how does it differ from the current internet? Web2, that is.
I'm not sure how, I think Web3, I would say for me, Web2 is very, content, like social media, stuff like that. But Web3, you start you can start seeing like money, finance on chain. You can start programmatically do a lot of stuff with it. I think it's quite cool. Yeah, it's very different than like today you go to Instagram and just see pictures. Then you go like.
I think a fundamental shift is also like ownership of data, right? And also financial perspective. You actually can create and own currency on chain. Bobby, your thoughts?
Yeah, I mean, Web3 is basically the next evolution of the internet. If you look at the difference between Web2 and Web3, in Web2, you don't have any ownership of your data or assets. In Web3, you actually own your data, you own your assets. On Web2, all you get, I mean, big tech firms like Google, Facebook, all you get is a bunch of likes, whereas over here, you actually own the assets. Technically, if you own on a wallet that you control, nobody can seize it away from you. But if you have game assets on Steam or some of your things look, Facebook can deactivate your account. I mean, look, even President Trump was thrown away from Twitter and Facebook. Don't really control your assets, but in blockchain technology, and there's social graphs being built where you actually own your social network, for example. So that's one of the big the big challenge, the big difference. I think second big difference is Web3 is also trustless. There's no need for intermediary. They're decentralized and offers new ways for users to participate and earn rewards from these wire tokens. Whereas in Web2, basically all the financial profits actually went to Facebook and Google.
Cool, I do agree. There are some challenges that we'll address in a bit, but I like that, Bobby. Yes, Nicholas, real quick.
Maybe just to add on a little bit, and I think Bobby encapsulated Web3 very well. It's really about ownership. I just wanted to put things in perspective. I want to borrow something I've read, and I forgot which book is it. But I think when talk about Web3, there is definitely going to be Web 1.0 and Web 2, right? So I think the best way that at least helped me understand what is Web3 is by looking at what Web 1 and Web 2 is. And so Web 1 essentially is like early stages of internet, where you can actually read stuff on the internet. You can only read, you cannot interact. You go to a web page, you see the information and you absorb it. So that's Web 1.0. Web 2.0 is sort of the age of your social media, where now instead of just reading what other people post, you can actually post stuff yourself. You can tweet, you can post a Facebook post, and that's the evolution. You can read and write on the internet. But for Web 2, one of the key things, and that leads on to what Bobby was saying earlier, is that Web 2, you don't own whatever you post. Like your social media assets per se, it's not owned by you. It's owned by Twitter. It's owned by Facebook, right? So which is why you have censorship that can happen, like what Bobby was sharing. Web 3 is about owning. It's an evolution from Web 2 in the sense that you can own digital assets natively on the internet. And that's why I think it's such a game-changing thing, because now you can own financial assets, you can own your social media assets, and any assets that you can actually encode in the digital form. So that's just to put it into a little bit of perspective.
Thanks, Nick. Matt, you've been here, I guess, in the Web3 space, specifically Etherscan. You've been here for almost a decade now, building on everything Ethereum and beyond now, from what I understand. But contextualizing it to Malaysia, what do you think is the current state of the Web3 economy and development in Malaysia from a project and technology perspective?
So from a technology perspective, I think we've definitely matured as an industry. If we go back to the early days when we were building, right, it's just a bunch of us who hang out at the Kopitiam or Papa Rich and figure out what to do. I think the early days, we even had smaller attempts on organizing ourselves into committees and stuff like that to figure out how we can champion that going forward. But when you fast forward today, right, I think we already can see from the panel here, I think there's a lot of strong, smart, bright people in Malaysia that actually can build on Web3. And one of the things I like to share, I think, is with Web3, and also to extend on the definition that was talked about later, right? So in Web3, there's this whole basis of ownership, right? So I think other than ownership, also one of the things that powers our whole economy and the internet today is algorithms. So I think traditionally, the algorithms, meaning like, you go to YouTube, how does that trend upwards and downwards, right? Those were not really open in Web2. But look at Web3 today, right? Everything's out there, it's open source. So given that it's open source, it actually kind of levels the playing field, and it allows us, as Malaysia, within Malaysia, to compete on an equal playing field. Yes, it is competitive, as what Xiong would say, but it at least gives us a chance to compete. So I think diverse set, bright people, and we've proven that we actually can build stuff out here.
Do you think from a funding perspective, we will go into funding much deeper, but right now I want to address, do you think from a funding perspective, projects get the funding they require from being in Malaysia, or do you think being in other parts of the world helps them a little better?
To me? Yeah, okay, yeah, so traditionally funding, I think on myself, I think we raised a normal round in 2016, right? So it was just much more challenging. But you look at Web3, right? So the whole essence of Web3, I don't think funding is an issue in Web3. The reason is you have, as a startup, as a company, as an organization, you have access to global capital. You're not only limited within that specific jurisdiction. That is, so meaning, and the world is such a big place, right? So if you build something, there's always going to be value added because your scope in marketplace is so big. So I don't really see funding as an issue for a lot of Web3 projects, assuming you're building something that has value.
Cool, got it. Now perhaps we can touch on something cool. So for those of you in the audience who might not be aware, a very innovative concept in the Web3 space is the concept of a decentralized autonomous organization, or DAO for short. Basically, a lot of decentralized firms, decentralized Web3 projects and companies run on a DAO basis, right? And it differs quite a bit from a traditional corporate governance structure. So, Bobby, perhaps you could illuminate everyone here, including us. How does a Web3 DAO structure differ from traditional corporate governance structures?
Yeah, I mean, if you look at traditional corporate governance structure, shareholders don't have direct participation in the decision-making process for companies. The shareholders, the most that they have is they get a chance to vote during the annual general meeting to select the board of directors, and then the board of directors then, one of the main decision is to select the CEO, which then decides most of the decisions for the company. Obviously, some decisions are much larger and that requires the board approval, but by and large, shareholders don't really get that many decisions to select. If you contrast that with decentralized autonomous organization, and this is via token ownership, the governance model is very direct, where every token holder gets the chance to, raise a governance proposal and actually vote on the proposal itself. So that's kind of the big thing. And I think the second big one is transparency and accountability, because according to the DAOs, major decisions should be put out into a governance proposal, and then you could actually see what are the proposals that are being put out, and who votes and who voted which side. And this goes on an ongoing basis. Obviously, there are some challenges with it, but I would let it, maybe Xiong has something more to add.
Yeah, maybe we can pass it. But before we go into that, Xiong, one of the biggest projects on Solana, making waves. I think your DAO is also one of the most active DAOs as well.
I think we have one of the, I'll say the most active DAO across everything on chain right now. We have I think more than 500,000 people.
Wow.
In the DAO. Then they stake I think close to like 400 million worth of tokens into the DAO. The last vote just concluded 2 days ago. I think about 300 million vote.
Oh, that's impressive numbers.
Something like that. Yeah. And it's actually very funny because when we started, there are different ways to structure the DAO. There are things that are the contract directly tied to the DAO. So the DAO, the voter can decide certain parameters on the thing. We are not that. You can do that. Some people are doing that. Our DAO runs quite differently in the sense that a lot of decisions are not enforced. I mean, technically, we cannot really enforce it on chain, but we are letting people decide, how we should move, do this thing. So, for example, the last proposal is about, because to encourage our DAO participations, we allow people, we actually give out tokens for them to participate in every single proposals. Okay. So the last proposal was about so we have this 200 million token sitting in the treasury. So the question is should we allow this 200 million to be given out if people are participating in the DAO over the next years. So it'll be 50 million every quarter if they keep participating in the DAO proposal, like voting and everything. Surprisingly, like there are 3 options there. Basically, to keep giving out the reward or burn all the 200 million, or I think the last one is like put the money into the treasury, decide later. It's actually pretty cool because you see all these DAO participants, the voters, decided to say yes to give out 200 million for all the future like activities that are happening on the DAO.
Essentially, incentive for them to participate in the project. But from an execution perspective, you've been running, or the community has been running DAO. Are there any shortcomings in like?
Yes.
The
Obviously. So we also have funding for the working group as well. So the way it works is that we have the DAO, then we have like small working group that work for the DAO. Obviously, like when you give fund to everyone will have like a say on it. And unlike traditional like working model, like probably below certain budget, like you can just decide or whatever. But all this budget, even like I think it's not big, like 100,000, 200,000. Everyone like have a say on it, and it can get pretty crazy because people can start tweeting and start commenting on everything. And we run like a community call almost like every week to make sure that the DAO water, the community, all in sync with our like what we are trying to push. Yeah.
I think one last question just on the DAO section before we move on. Like, do you wish that sometimes you can intervene and make decisions because people who are voting are not necessarily going in a reasonable direction?
So it become very active. Like we cannot decide because like we ourselves don't have enough token to like sway the decisions, right? So we have to keep communicating. Okay. Like on Twitter, have to say, okay, this is what I think is the best for these directions. But obviously, it's up to the DAO to decide whether what we say is correct. I mean, it's what they want. Yeah.
Got it.
It's actually very interesting as well because it become a very hectic and also a very exciting process as well. We have to keep communicating. Then we have to run all these like weekly calls to make sure that like we are delivering the right message. Because a lot of them it's like they want to see what we think is the option that we will vote. Yeah.
Got it. Thanks, Young. I think DAO is a very interesting concept, but of course it's completely decentralized. So when it comes from a regulatory angle, I think it's a question of like how to even approach it, right? The US has, IOSCO actually published a paper on, how one should regulate DAOs, but I think most regulators are also like thinking about how to go about it if the exchange or, the operator wants to be regulated. But it's an ongoing process, I believe.
US state of Wisconsin actually recognized DAO.
Yeah, but the US also attacked companies like Uniswap and all. So I mean, but anyway, I'm not going to get into that. Nicholas, maybe I can approach you with interesting funding questions, given that your platform basically facilitates token fundraising, right? An evolution from token fundraising. How do you think investors should go about like due diligences across the projects they're investing in, given that when you fundraise through Web3 firm, essentially you're submitting white papers. It can get technical to a certain extent. So how do you think investors should go about conducting their due diligences when it comes to this?
Okay, so I think probably the best place to start, and before I go into your question, Dina, I think probably good to understand a little bit more about the different types of fundraising when it comes to using tokens, right? So for Pitch In, we we help companies to raise funds through different types of tokens. One of which is more utility-based token. When the project is early stage, they are sort of have an idea and they want to raise for that idea itself by promising tokens that they'll be given out when the project is launched. So that's type one. And type 2 and type 3 is more traditional in nature. So we also do asset-backed tokens that are backed by assets, and tokens that are representing a shares and debt. I think for type 2 and type 3 is quite similar to your traditional means of doing due diligence. Really about making sure that you understand the company's plan, you understand that you believe in the founders, you believe in the company, looking at the valuations, whether it makes sense, if it's a debt instrument, looking at the credit. So it's very similar. Probably the additional thing to look at is really just the whether your rights are protected when it comes to owning, say, a share versus a tokenized share. And this admittedly can get challenging at times. And the easiest way, of course, is to just work with someone that's regulated, which will look through that for you. So I think that to sum it up, the more traditional type of tokens, which is asset-backed tokens and tokenized security, is not too different in terms of evaluating it. It's more potentially just looking at additional legal protections, like how you can exercise your rights if, say, a company goes bankrupt, for example. When it comes to utility token fundraising, so I think there are different ways to approach it. And for us, I'll start with the role of the platform first, what we do, and then I'll talk about potentially what other things investors should look at. So I think for the role of a platform, our main job is to make sure that disclosures are there. Because when investors is investing in something that is so far ahead, it's an idea, oftentimes some disclosures may not be there because it's hard to put it in words. So one of the main roles of the platform when it comes to due diligence is to make sure that whatever plans and whatever things that the company wants to do is being disclosed, and investors can get the information from looking at the disclosure documents. So that's one of the main roles. There are other things that we look at as well, doing KYC and things like that, but that's essentially the main thing that we do. So from an investor's perspective, when they want to do assessment on the project itself, I think one of the most important things is to make sure they look at the white paper. In our case, because the white paper is also being vetted through to make sure it's accurate. So I think at the very least, the white paper has to be studied to know that what are the plans of the project, what are they promising to deliver as a start. For the technical component of it, oftentimes can be challenging for investors to understand basically, what are ZKs, what are the differences between different blockchains. Those things, I think as investors that probably new to the space, probably less important for them. I think those things, because like what Matthew was saying, this code will be made open source. We also do get them to do an audit. So the idea is that if it's open source, there'll be more eyes looking at it, and eventually the code will get better, right? So that one is less of an issue from investors' perspective. So beyond the things that are on the white paper, and this is my own view, I feel that when it comes to looking at projects, which I think one of the most important things is to find projects with a product market fit. It's common to hear this term in the traditional side of the world, but Web3, oftentimes there are a lot of projects that operates in such a way where token comes first and then they find the market a bit later, which works because to some extent because they need money to build sometimes, and token is how they get the money. But I think for long-term, more sustainable product market fit is the most important. And especially if you are a newer investors, probably finding something that has a product market fit that is serving a problem in the industry, whether it's Web3 or Web2 or Web 2.5. I think that's the easiest way to get into the market. And that goes into evaluating what the company plans to do, whether it makes sense versus the business problem that they're trying to solve, and whether the team can execute it.
Very well put, Nicholas. Matthew, you were throughout your journey in Web3. I think you also experienced a lot of ICO scams, right? I think at one point in Malaysia there were a ton of ICO scams. Well, let's not even talk beyond Malaysia, right? And I think the entire reason why IEO platforms exist is to address ICO scams. So, from your perspective, how has going into the regulated space informed investors that there's a removal of certain element of bad actors, and it's okay to go onto these platforms as opposed to going into the ICO space, given that it's unregulated. So essentially, what's the incentive for investors to go into a regulated space as opposed to the unregulated space?
So I might not be the best person to answer this question, but the way I look at Web3 actually is probably a little bit opposite of that. So I think with like what Nick was sharing, right? Investing in the space, if I had to sum it up, it's complex, right? There's so many things that you need to go through. Traditionally, with Web3, the reality is when you look at investors, I guess you can categorize them into two different segments, right? So you have the institutional investors, who are probably you have to do a lot more duty. You go through the things that Nick shared, the white papers. Then you look at the team, and you look at what the project's doing, you look at source code, all right. But the reality of non-Web3, right, the retail users, right, a lot of times it's just a flip of a coin, literally speaking. So having said that, I think the interesting intersection is like, how do you jive both of those, right? How do you find a balance, right? So how do you find a balance of sort of safe, I won't say safeguarding, but perhaps putting into place certain structures that kind of safeguards investor interest, but at the same time does not stifle innovation. I think that's the challenging portion, and that's something that I don't have an answer to.
Understood. I completely understand. Speaking on innovation, Bobby, you track over 11,000 tokens, more than 150 chains, if my numbers are right. From your experience, monitoring all these tokens, what are some key innovations that you've observed in Web3? For example, in decentralized finance, and are there any concepts or models that can be borrowed from these innovations and applied to traditional finance?
Yeah, so I think some of the big innovation that's come out of blockchain technology is, obviously in decentralized finance and DeFi. And one of the big thing in DeFi is that it allows for permissionless financial services. So DeFi eliminates, whether for good or for bad, intermediaries. Obviously, there's going to be a lot of big business model changes. So anyone with an internet connection can go out and participate in services. So it's a very peer-to-peer model in lending, in borrowing, in trading, and you can earn all kinds of interest from it. So it breaks down a lot of barriers, makes things obviously more efficient, cheaper for the end user, and even regions where they have underdeveloped financial services. I think one of the big innovations in DeFi, it comes down to decentralized exchanges and this concept called automated market maker. Traditionally, exchanges, and we have exchanges like Bursa, they all work on a centralized exchange model, a centralized limit order book, a club model. Whereas in DeFi, one of the big innovations that came out was this thing called automated market maker. So instead of a club model, you have market makers coming in, participating, providing liquidity to two tokens, and then the price automatically provided from it. And this AMM thing is something that is, probably very hard to implement in a traditional model, but it's very different. But one of the big things that came out from this AMM LP is that anybody can kind of, it democratizes market making. It allows anybody, even though you have, if you want to go and market make on one of the centralized exchanges these days in the traditional stock market, you probably need a lot of money, you probably need to get some access and all. But in DeFi, anybody can go and provide liquidity for ETH USDC, for example, and you can put in like $50 of market making if you want to do it. But this is not really feasible in traditional finance. I think some of the other interesting applications would be real-time settlement and clearing. I mean, we've been talking about T+3, in a traditional market, and we want to bring it to T+2 and hopefully T+1. In crypto, there's no such concept of T plus whatever, right? It's instant settlement. Once a trade, if I made a trade with Xiong or Matt on a decentralized exchanges, it's done, it's confirmed. The blockchain shows that this sticks there. You can't really reverse, undo it unless obviously there's a blockchain rollback, for example. So I think one of those things, as we get towards a stage where more and more assets are tokenized, and I think we talk a lot of real world asset tokenization, we'll probably get to the stage where we probably won't be talking about T+1 or whatever settlement, have instant settlement for all assets, and everything's recorded on a blockchain, so everything's obviously transparent, auditable, and there's all this proof. So yeah, that's a world that I think we are, getting closer to. I think probably not that far away from that stage, and I think we'll start seeing that soon.
Yeah, I think AMMs, I echo you completely. I think AMMs are a super cool feature that have come out of DeFi. I do agree with you. It's very challenging to bring it into the regulated traditional space. But I think STOs are also interesting concepts where AMMs could potentially work given liquidity is healthy. But anyway, I think we're still maybe a couple of years before we're there. Now we've spoken about innovation. Let's talk about a little bit about the risk, right, associated with Web3. Xiong, in your opinion, what are the key risks that you've observed as a builder of Web3 projects from both a business perspective, from an investor perspective, and how do you think this risk can be mitigated?
I mean, we were talking about investment earlier, right? Looking at projects and stuff. I mean, one cool thing is that, like other than the white paper, the team, and all these things, a lot of data are also on chain as well. Like you can easily see, like if the project is active or not, right? It's like because if you're doing like okay, there are two layers. Like if someone's building a new L1 chain, there's probably not much traction you can really see. But if it's a new protocol launching, like let's say Solana, right? A lot of things you can immediately see the things happening or not. Yeah. So the traction is there. Then it's also very funny as well because like crypto project when they go out for fundraising, right? A lot of times like you also need to be somehow active, like to start forming the community and all these different things as well, right? Because one of the idea of token is that like we talk about, Web 1 is like what, read, then Web 2 read write, then Web 3 is like read write own, right? Like a lot of times, a lot of these new projects, right? You don't even have to put money in. You just have to participate early on in the project. Because a lot of these projects will end up airdropping like token so that people who are actively contributing to it. It doesn't have to be financial. It can be like, like
Community member.
I write a tweet about how cool this project is. Then they think that what I write is actually very cool. They decided to give me some tokens, like to co-own the project, things like that, right? It's actually interesting in a way that like obviously, like it's hard to see what are real, what is not real.
Yep.
But at the same time, it's like you also make it a lot easier to see as well. Yeah. But I'm not sure how to describe that as a risk.
No, I think it is a risk factor, but I think it's quite interesting. But I think it comes a lot with the experience too, right? I think it's experience. If you're in the community, then you know who are actually building something. Who are verifiable people who are tweeting and sharing information, and who are bad actors essentially. But yes, I think to the common investor, it's not necessarily easy, which is why
I would say protection is probably one thing, because in the end of the day, like if you really do put money in a bad project, or like somehow like there's not much protections, and sometimes you don't even know who are the founders behind it. You only know, okay, they are like this, profile picture on Twitter or things like that. Yeah, I think that's I'll say like a big risk. But there are also ways to protect it as well. Like you can even do like a smart contract. Like people put money in it. The founder can, when they hit certain milestone, then the money get released.
Okay.
Yeah, things like that. You can even make the whole thing like a DAO as well. So technically it's like, like you say you're raising like, let's say 10 million to do X, right? So the first tranches of money can only be released after you hit certain milestone.
Yep.
And everyone who put money in has to say, okay, now it's time to release. Things like that. Yeah. So it can be quite cool as well. There are ways to structure it. Yeah.
Thanks, Young. Matt, what are your thoughts on that, on the risk of Web3?
So the only way to be risk-free is not to put money inside. And that's the beauty of Web3. You don't really have to put money inside. So like extending what Seong said, right? So in Web3, it's one of those unique places that you can actually even get rich just by putting in your time. Yeah. So meaning being part of the community, engaging the community, and also there's this, so in Web3 and DeFi, there's this thing called, for those who've been investing, they call it airdrop. So literally it's money dropping from the sky. And a lot of it is like even people posting on there's this thing called Discord and even Telegram, on Twitter, or engaging the community. And actually that's one of the things in Malaysia that we do very well, is engaging the community. We have very, very strong community builders. I think maybe due to our culture and stuff like that, it's just strong folks here. So if you're afraid of losing money, don't put in money, put in time. Yeah, time does cost money, but it's slightly lesser risk towards that extent. So I think other than that, also it depends, I guess, on your risk appetite, right? So if you want to invest into stuff that is less volatile, I mean, obviously today we have things that even like ETFs, right?
Yep.
So maybe that's from an institutional perspective.
Exactly.
Maybe that's an option, right? Do into the blue chips ETFs.
Yeah.
The ETFs are out there, really. I think what would be even interesting if it's done in at least on ETF, right? It's done in a regulated way in Malaysia. So that would be actually interesting and probably provide a proxy into that whole the upside of crypto.
Yeah, I think in Malaysia, just to share with everybody, we do have a fund manager providing exposure to crypto assets, but it's from a mutual fund structure. But still, I think it's a very, very interesting way for investors to be exposed to digital assets without actually having to own them, for those who don't want to manage it.
Actually, that's also one of the biggest risks as well, like like how do you store, like how do you store like what you invest in a secure way? Because a lot of times it's just like a lot of hacks that will happen.
Exactly.
Yeah. Like even if you do invest in a good project, but in the end of the day, like if you don't have a very good personal, like cyber security, then like
That's a running
I think a lot of people lose money through self-custody. And like when I go back for the festive season, I'm always helping someone recover their lost keys.
And there's there's no protection there.
Yeah,
Like if you lose, you lose. Yeah.
Got it. Maybe I can pivot a little bit about the public understanding, right? So Bobby, this is for you. I guess it's fair to say, correct me if I'm wrong, I think it's fair to say crypto has had like a little bit of a bad name for people in like traditional markets, right? We won't go into why exactly, but I think what I want to ask is like, how can the industry, in the crypto industry or the Web3 industry, improve public understanding and trust in the technology, given misconceptions of bad actors? I'm just going to throw a name out there like FTX, right? But what can the industry do better?
Yeah, I mean, people lose trust. I mean, primarily because they lose money, right? If you don't lose money, you probably don't really have much to be angry about. And I mean, people lose money from a couple of ways. One is you invest in the wrong projects, like IEO projects that disappeared, RUC, for example, or you bought a crypto token, you bought Bitcoin at 69,000 in the previous high, and I saw it drop to $19,000, and then you sold at $19,000, you sold at a loss, so you buy high, sell low instead of the other way around. Obviously, people are unhappy about that, and they call it a scam. And there are many people who call Bitcoin a scam because they timed the market wrongly, and or maybe they just bought Bitcoin, they have it in their own wallet, or they bought Ethereum, put it on MetaMask wallet, but they don't have very good cybersecurity OPSEC, and they lose it because like somebody had a Trojan on their laptop, or they just lose their seed phrase in multiple different ways. To a large extent, I mean, education is the key, right? And this is not a problem specific to Web3, because if you look at what's happening in Web2, I mean, you have all these scam callers calling our elderly or anybody, hey, you got a call, hey, this automated call from your bank or from LHDN or whatever, saying that they're either trying to steal information or they're trying to steal your money, and they kind of use all kind of psychological, social technique to kind of force you to transfer money. They call it a pork butchering, they pig butchering, they scam. They put put 1,000 ringgit first, and then 10,000 ringgit, and then 100,000 ringgit, and before you know it, you already send 1 million ringgit over to this scam, and then you realize, I probably went too deep. And then at some point, I mean, I've spoken to people who've been scammed before, like say like, look, I've been in a scam, and like, look, this guy is saying, why don't you send like X amount, like another 1,000 ringgit to kind of unlock this X amount of money that I've already sent. Like, it's obviously a scam. You're going to send 1,000 ringgit, it's not going to unlock whatever money that you've already lost. The money is lost, it's gone. So it's not specifically a Web3 problem. It's the same problem that's happening in Web2. You look at Bank Negara and all everybody's doing all kind of education initiatives trying to teach people, hey, you get a scam call, like, just hang up, don't give up any of this information. It's the same thing. So like in crypto, how do you protect your seed phrases from people trying to steal your crypto, for example? Obviously, buying an ETF is probably one way, so at least the bank or the custodians, the brokers out there to help you protect yourself against fraud, for example. But there are things like, buying rugs, obviously, if if you maybe invest in projects like that, or pitch in, for example, that have done some due D, and I mean, there's so many other projects that they don't have due D if you want to invest, like meme coins and all. I mean, but I think most important thing is like if you buy high and sell low, like you can't really
Expect,
what do you do? Like, I mean, it's the same. You could do that on any stock on Bursa Malaysia or any stock on Nasdaq, for example. I mean, you only have yourself to educate on when's the right time to buy, and then I mean, you need to know your investment, your risk appetite, your time horizon. How long do you want to hold this asset? These are things. So education is kind of the important thing, but you know, it needs to come from the self as well, actually.
Agreed. Yeah. So I think financial literacy is the theme. Little shout out to InvestSmart. We run a series of education in the capital markets, like any investments you do. So check them out. And yeah, I agree with Bobby. Essentially, like financial literacy is the game. If you can delineate between what's good and what's bad, make some smart decisions. I guess the risk is lowered a little bit. But yes, Nicholas, I'd love to hear from you.
Yes. So I have 2 points. 2 points to share. I do agree with what was mentioned. I think education is key. But I think one thing that really enables education to be done in a more constructive way is really to. I think we need to enable your Web3 giants, your Web3 innovators, the ones that are really in the space, to be able to speak to the crowd and educate them publicly, because we do have a lot of very good people, good projects out here. I mean, we have 3 up here with us today on stage. I think, which is why I think certainty is very important. Being able to know what can be done, what cannot be done, so that people can actually speak up and educate well. I feel that this is something Malaysia faced, because I think this is my own view, right? Because we started regulating the space too early. Not say too early, but we started regulating it very early. We started regulating it during the ICO boom and bust 2018. Which I think, to be fair, is a very good move, because I think Malaysian investors were largely shielded from all the exchange collapses that happened the last few years. But because of that, there's that innate fear in the industry that Malaysia is not receptive to anything Web3. But that's not actually the case, which is why I think a lot of them, they just they tend to operate quietly, and that gives room for your scammers to operate, because they are hiding under these guys. Right. So I think that's one very important thing, is that mentality to change, so that we can have productive conversations, productive meetups to talk about just Web3 in general. So I think that's number one. Number two, I think, is to build on what Seong was saying earlier, because I think when it comes to Web3 or more decentralized nature, it's a double-edged sword. It's not just the risk, but there's also a lot of interesting solutions that can come out from the industry itself. I think Seong was just sharing about how smart contract can be designed to mitigate some of the risk. And these are, and I feel that the industry itself plays a role as well to make sure that some of these solutions can be developed, whether it's in the form of standards or industry verification, for example. Like, as an example, right, there's some sort of DAO in the world that says these DeFi protocols are verified, founders are verified. So I think there are a lot of things that the industry can actually take a lead to protect at least newer people to come into Web3. And I don't think that regulators definitely have a role to play, but I don't think that it should all fall on regulators, because look at any new development, regulators always play catch up, right? And the space is moving so fast, so I think industry has to play a role to actually provide resources for people to understand how to coexist and interact with Web3 in a safer way.
Yeah, thanks, Nicholas. I think by the very virtue that we're all on this panel here today shows that we're not shy away from innovation, we're not shy away from Web3 development. In fact, we are very excited. But maybe we can pick up some questions from the Q&A session and then segue back into our panel. Maybe we can start with Matt. So there's an interesting question here. What's the wish list that you have for Malaysia Web3 ecosystem to flourish further? For example, supportive regulatory frameworks. What do you think needs to be developed in the next, let's say 3 to 5 years?
So for Web3, right, there is, so maybe from a regulatory viewpoint, right? So I know one of the challenges for a lot of companies that are actually based in Malaysia. So we're based in Malaysia. We are a Malaysian company. It's actually very traditional issues. So for example, you have issues like banking, right?
Yep.
So I know like perhaps if you're on exchange, right? So I think maintaining, I can see some exchanges here. So I think maintaining a bank account is probably kind of tricky. So it's really simple, right? Like, how do you maintain a bank account that doesn't get closed down, right? So maybe having certain frameworks in place or things that you can follow, that might help. Because right now it's really vague. And at the end of the day, right, I think if you look at crypto in general, right, there's always this issue, at least for retailers, right, the on-ramp, off-ramp, like how do you put money in, how do you take money in. And it looks kind of simple, but it's actually a real issue, I think, operating within space. So yeah, if it's a little bit more clear, that would help, right? From the technology perspective, from the ecosystem perspective, more like a startup perspective, I would say it's probably the opposite. So don't over-regulate. Let the companies innovate. So there's just two different perspectives. That's one way of supporting it.
Yeah, highly controversial, but I appreciate your candid feedback. Maybe Seong, we can ask you this question instead. Since you operate within the space, do you feel like coins like Doge and all these random meme coins are harmful to the industry? Harmful. Yeah.
Meme coins.
I'm not sure how to answer this question.
You can skip it if you want.
I can answer down to stage, but not on stage. Yeah.
Okay, cool. We'll take it
So
offline.
I should pull back my answers now, right?
Okay, maybe I can ask you a different question, and I'll pass it on to Bobby later on for this. What emerging trends in Web3 and DeFi should Malaysia's tech community be paying attention to in the next 3 to 5 years?
Meme tokens.
Oh, that's this guy.
So Seong has answered the question already, your earlier question.
I think you can explain what meme tokens are, not maybe.
Actually, it's very interesting, right? You see Doge, you have this like meme that everyone remember. Somehow a token appear from the meme.
Yep.
Then you also see celebrity movement like Mother Token, which is like Iggy. Like she started it. Now like she's backing it. But obviously, there also a flip side of it. There are like celebrity tokens that the celebrity ended up like giving up on it and stuff like that. Yeah. I think it's very cool to see like certain culture or cultural movement being captured as something that people feel like they have ownership on. Like the whole mother like equals like this meme token thing. You see like like Iggy tweeting about it. Then you see like the whole how she talk about it, how she really like think about it. It's very different. Yeah, it's very different than like because a lot of time we think about like a token or like something with any financial like value has to be something substantial in the sense that like they are doing proper business, like certain kind of revenue, but why not like certain cultural movement can be something that can be tokenized, can be valuable as well, right? If you look at a lot of times like like certain things can have value without, how do I say it, like not like substantial, you know what I mean?
Without an actual underlying value. That's what they said about crypto for years.
So if I can add on, I do agree. To be honest, I don't think meme token is harmful. I'll say it. Because like what Seong says, really representing a culture and idea essentially, right? And for me, meme token is not the issue. I think it's really in certain instances there are people that manipulate the token, right? I think that's where the issue lies, right? People pump and dump because it's to a large extent easy to do so in the space. So I don't think meme token is the issue. It's really in certain instances there are certain factions that would pump and dump, and that's the issue in my view.
Yeah.
Bobby?
I'm trying to think of a way to kind of simplify this meme coin concept for everyone who's not really familiar with it. But I think maybe let me take a step back. I believe in a future where anything that can be tokenized will be tokenized. Any kind of asset, anything that has value will be tokenized one way or another in the next 5, 10 years or 20 years, whatever time frame that would take. Anything that has, in the internet, anything that has attention has value. And what we are seeing with the rise of TikTok and Instagram, Reels and all is people can become an overnight celebrity instantly just because one video that you make suddenly becomes viral and becomes a culture trend. Meme coins is a way of tokenizing this culture. So you can think of it as a tokenization of culture, financialization of culture. And we're getting to a stage where there will be some sort of speculation or financialization. Basically, with tokenization, it allows people to put a price on how popular a particular culture will become. And in a meme coin, anybody can create coins, and anybody can watch a TikTok video or watch something or see something and create a token. And that's how Dogecoin, which was one of the original meme coins, came about. What does this meme coin promises? It promises nothing except that it just represents this meme or this internet culture. I guess if you look at shares, it represents the profits and loss of a company. If some tokens like Bitcoin represents a share of this network that controls. And many other utility tokens promises you that if you buy this token, it gives you access right to some of the things. Meme coins promises you nothing. So if you don't promise anything, can you say that it's a scam? I don't really know.
That's a very fair way to put it.
You know?
Brilliantly put, yeah.
And you look at Dogecoin, and who are the people promoting Dogecoin? You have people like Elon Musk just putting up, a picture on his Twitter, say like, Department of Government Efficiency, Doge. And he talks about Dogecoin all the time. He wants to talk about sending Dogecoin to Mars. Like it doesn't do anything. It doesn't. So it's kind of hard to argue that that you're scamming something. But then again, obviously, there's a lot of bad actors out there in the space. But I don't want to put a picture that meme coins are generally a financialization of internet culture.
Got it. I actually completely agree with the tokenization of... It's basically another fad that people have just taken advantage of by tokenizing as a means, right? But I guess one could also argue, like, there are certain influential people out there, for example, Elon Musk, that people naturally gravitate towards and pay attention towards. So if Elon Musk says that, I'm going to buy shares in Doge, or if I'm moving Tesla completely to Malaysia, all of these things have severe sentiment and movement and impact to the markets, right? I do agree. So end of the day, people can do what they want. These are influential people, and people are drawn towards them. But it goes back to the fundamentals of financial literacy, right? If you can separate and understand that some things are just not worth following, and understanding that there has no underlying value, then that's where the true essence of the nature of the token lies, actually. Maybe I can pivot a little. Thank you so much, Bobby. Maybe I can pivot a little bit to Nicholas. I'm sure as an IEO, you come across many exciting projects. This is one of the questions from the audience. Have you seen any new exciting Web3 projects being built in Malaysia?
Yes, so I think our niche is really, and I'll start off by talking about the space that we operate in, right? So I think we call ourselves token crowdfunding. So what we do is essentially we help projects to launch. When they are ideation stage, we help them launch their token, raise funds to build their project. And the listing comes a bit later, right? So that's the space we operate. And the difference from comparing us with other launchpads in the global market is that we are a regulated launchpad that supports utility token, which there isn't a lot in the world. So a lot of the companies that we're looking at is actually a lot of the Web2, the more traditional companies, trying to come into the space and innovate in the space. And I think this is our biggest niche, because a lot of them, they have a Web2 business, they have the community, they have the product market fit, but they don't want to take too much risk to go into an unregulated space. As an example, I think Telegram, a few years back, they did their Ton launch in US, but they had to buy back everything because the US SEC reprimanded. So they don't want to expose themselves to this sort of risk. So a lot of the companies that come to us, they are in the Web2 space, they're trying to innovate. Right. And I think our first project was a prop tech company, for example, been in Penang. They've been in the market for 4 or 5 years. Essentially, to some extent, they are launching a token that's more community-based. It's for their own community to use in the platform itself. I won't share names because, especially in SE, I don't think I will be able to promote any new projects whilst it's being reviewed by the SE. But we do have F&B brands as well that we're working with. We have B2B platforms looking at tokenization. We have non-profits trying to essentially tokenize a culture, a vision, which is the non-profit mission that they're looking at. And those are the utility side of things. We also have a lot of companies coming to us looking at tokenized assets. right? To build hospitals, to plantations, for example, and also shares. So to sum up, in terms of the deal pipelines that we're looking at, a lot of our deal flows are from Web2 companies looking to innovate in the space. We have Web3 companies with us as well, but for them, it really depends on what they're looking for, right? Web3 companies, we have some as crazy as doing a DeFi protocol that came to us, even to extend some that's looking to establish a investment DAO. Right, there are a lot that come to us as well, but I think for us, it's really a matter of whether you need it to be done in the regulated space, or you can, if you can do it in other platforms, other jurisdictions that works for you, you can consider that, because I think regulations still need to catch up a little bit to some of these new models. Right, so just to sum up, most of it is Web2 going to Web3, or Web2 trying to do tokenization. For the Web3 deal flows, we have a lot of funky projects, but we are also advising them which one works for them best.
Cool. I think it's very, very exciting to hear Web2 companies going into Web3. And I think it's also a testament to you and your success out there. Congrats, Nicholas. We don't have a lot of time, and I do want to ask one last question. But before that, I would like to pose this to Seong, actually. How do DAOs defend against a governance attack?
Impossible.
Oh, okay. So if a governance attack happens, there's almost no way to go about it?
Like I said, we just have to keep communicating, oh, this is what we think is everyone should vote for, but if the community decided it's different directions, then
you can't do anything about it. So that's the running risk.
Yeah.
Okay, got it.
That's why we don't really. Some people put a lot of things all directly tied to the DAO. We don't do that for now because, for example, certain parameters whether we should charge a fees on Jupiter now, we don't let the DAO decide. Yeah.
Got it. Okay, maybe just one last question to to our esteemed panelists. We can start with Matt. Matt, what opportunities do you think do you see for Web3 in Malaysia over the next 3 to 5 years, and what can the capital markets specifically do to support the growth of the industry?
Trend-wise, I think more on a personal level, I think I'm definitely excited to see if there's a intersection of AI and crypto, given that Malaysia is right now one of a growing hub for data centers and compute. On the capital market part for Malaysia, I think given that Malaysia is a strong Islamic, when it comes to Islamic finance, right? I think it would be kind of interesting to see if we're actually able to launch maybe a tokenized sukuk or bond on-chain in a regulated way. So I think that could be a pioneering thing, and that will kind of put us in a map. So basically focus on your strengths.
Yeah, I think also, I think for everyone here, our chairman yesterday announced a project with Khazanah on a bond tokenization pilot. Details are to come down the road, but yeah, we are underway.
Cool,
Exciting
looking forward.
Yeah, Bobby, what about you? What's your vision, and how can the capital market support the Web3 industry?
I think capital markets has I think from a capital markets perspective, there's I think similar to what Matt said. I mean, do tokenization of things of assets. If it means sukuk, but I think we're seeing BlackRock playing a major role in a lot of places tokenizing things. I think there's probably big players like Pitchin and all. I think companies always want access to capital, and how can the regulations provide an environment for companies to raise money. I think there's property developers, there's hospitals, how to do it in a safe and compliant manner. I think we have a clear framework on what can or cannot be done, how can it be done. I'm sure there's a lot of Web2 companies will embrace this and issue tokens, bonds, for example, on chain, and I think that's where we'll be. Yeah.
Thanks. Nicholas has something to add to that.
Just one point. So one thing I do want to see is I want to see a way for the capital markets in Malaysia and anywhere in the world to coexist with DeFi. I think that's very important, because if you strip down the fundamentals, the regulators don't really have a problem with DeFi. They have specific outcomes they want to achieve. They want to make sure they combat money laundering. They want to make sure investors are protected, and those are things that can be solved with some thinking. So I would love to have someone in Malaysia, pitch in, for example, or anyone that can just facilitate that connection to Jupiter, for example, for them to do a DeFi transaction through Jupiter. So I feel that's something that I really hope to see, is to figure out a way for Malaysia's players, Malaysian regulations to be able to coexist with DeFi such that we can bring new investors and experience this new space.
Thanks, Nick. To that, do you have any comments, Young? None. Well, we're running pretty much short on time. Yeah, Bobby, go for it.
I was just add like tokenized equity. So imagine like pitching equities being tokenized and it's on the Solana blockchain and we can kind of trade it on Jupiter. That would be like
Why not?
pretty ideal state, but
Ethereum blockchain.
Ethereum or Solana.
So we are planning a POC, a tokenized share with interoperable and also regulatory compliant, and I'll speak to both chains and see which one to go. Let's see what we get.
And all these equity crowdfunding companies, we have all these P2P players. I mean, Pitchin obviously was there. I mean, all these companies, very hard to get liquidity in secondary shares, but if you have these things tokenized and anybody can trade, that would be pretty epic.
Cool. Well, we're just about right smack about the end of the session. I'd like to thank everyone here today. It's very hard. I know you guys know it's very hard to get these people on stage. Very, very special people, titans of industry. Thank you so much for your time, and I hope you all had a pleasant session.
Thank you. Thank you, gentlemen. Web3 pioneers, everyone.